Now, I do want to say something about the Dow, up 160 points for the week, up 0.39%. It's coming up to this upper channel line, kind of interesting here. We were through it previously, but the Dow is moving to a new high. S&P is not there yet. Eventually it will join the Dow, but we're at this trend line. So just something to pay attention to. The Dow got a very interesting candlestick in the daily time frame today. I'm going to be looking to see what the candlestick looks like. Right now we have a candle of indecision in the weekly time frame that is a candle of indecision in the form of a spinning top. Is forming this multiple point negative divergence. So something to pay attention to on the Dow. If we look at the daily chart, the Dow got a very interesting candlestick on the daily chart. That was a doji today. It is forming a divergence. Whether that is done or not, we'll see. But you do have it developing here on the RSI. You do have it developing here on the MACD. So kind of an interesting candlestick to form as we're slamming up into that upper channel line in the weekly time frame. I thought that was rather interesting. Now, sometimes, but not always, but sometimes the Dow did a peak ahead of the S&P 500. Today, good example, the Dow was up, but yet the S&P was flat, Nasdaq was down. Oftentimes have up days on the Dow and down days on Nasdaq and S&P, vice versa. Dow starts selling off and we get these new highs on S&P 500 or Nasdaq or both. Again, I think Nasdaq has peaked, but I think it will move to the 20,400 area to fill that gap and get a lower high, get a bigger sell-off first. But interesting candlestick today with a doji on the Dow. We'll see if that gives us a bigger sell-off in the market. Candlestick's meaningless unless it's confirmed. We got to close below today's low. We got to see a bigger sell-off. We'll be watching to see if that happens or not with the Dow. Something worth paying attention to. And the candlestick is something worth paying attention to on the Dow because it's diverging with the transports in the lower window down here. Dow's moving to a new high. The transports are not. You tend to get these divergences at turning points over and over again that mark tops and bottoms, that mark corrective moves with the negative divergences between the two, or reversals, marking pullbacks or reversals. Just something worth paying attention to, because here we have a divergence again. Last one that we got right here, they diverged, and we had the early August sell-off. So again, we'll be watching to see what happens there with the Dow very closely. Now, as the Dow is hitting that channel in the weekly time frame and getting a doji there in the daily, we're right up at this long-term trend line, this long-term upper channel. Going back 125 years, back to 1899, this trend line right here. Again, we're slamming up into it. We slammed up into it in 2022. Saw the sell-off in 2022. And again, this is the Dow monthly time frame. So again, this is long term. This is 125 years of data with this trend line. With this upper boundary, if we connect the 1899 peak, 1929, go up to 2000, 2022, and now 2024, long-term major resistance. If we have a parallel boundary, hang on, it moved on me here. If we have a parallel boundary, the lower boundary here and here, again, this is eventually where we could be moving back to, is this trend line right here. If we just take it from this low right here, you have the red trend line below that. So just some trend lines I'm looking at. This midpoint is interesting. From the highs over here down to this low, again, that's where we stalled there. It's where we kind of stalled in here in the 1960s and 70s. It's where we stalled right here in the 80s, and then we had the move in the 90s on up to the 2000 high, and this became support, this midpoint for the Dow. Kind of interesting. So again, I'm looking for a move initially back to this midpoint area, but eventually I think we're going to see a move back to the lower boundary. But just long-term resistance. And again, let me just say this. The people talking about the soft landing, we're not going to have a recession, cuts are so bullish. Well, again, it's highly unlikely. The Dow's going to be able to clear this area. I've talked about this trend line being major long-term resistance. It is very unlikely that we are going to blast on through this level. Again, we're likely in a topping process, and this trend line is telling us, hey, major top is likely forming on the Dow, on the S&P, and on the Nasdaq. The AI bubble is about to burst, like we had the bursting of the tech bubble and the dot-com stocks. Financial crisis, we're likely going to see something like that here. Again, we see these credit-driven issues. Surrounding recessions, it's probably going to be a credit-driven issue with the commercial real estate sector and the problems there spilling over into the banks. Guess is we're going to see another bear market that's going to take us back to the midpoint. This is a long-term monthly chart. I think we'll see a bear market that will take us back to the midpoint. Eventually, I think we'll see a new bull market that will not make a new high and then eventually move back down to one of these trend lines. That's what I think long-term is likely in play here for the long term. We've got a 125-year trend line that has marked major tops: 1929, 2000, 2022, and now we are at it again in 2024, forming major negative divergences on the weekly and monthly charts in doing so and reaching this level. I'm watching the Dow so closely. Please support the channel with the link directly below. That allows me to be able to provide you this information. I don't have any sponsors, just a direct relationship with you. If you could take a moment to do that, I would really, really appreciate it. If you follow the link, it'll take you to a secured site. You can donate any amount you want or make it a recurring donation. If you do that, I thank you. But please consider supporting the channel today. Channels use sponsors. I choose not to do that. They contact me all the time. I turn all those offers down. I don't want to sell you a bunch of junk you don't need. Send you to websites where they want to overcharge you for things. So please consider helping out today. I would really appreciate that. Thank you. The VIX is hovering right here at the 50 period. If we're going to see volatility come back, you got to surge back here above the 50 period, the green line right there. Notice the 50 is above the 200. This is a huge warning sign. Likely, again, suggesting we are in a topping process. If the VIX holds below 50, the S&P can try to make a new high to fill the gap at the 5670 area. If the S&P gets a bigger sell-off, the VIX can surge above 50. Right now, we're just jumping up and down above and below the 50 as the S&P is getting that choppy price action. The divergences, the 60-minute chart, just giving us a mild sell-off, at least so far. We'll see what becomes of that. Okay, we had the Nvidia earnings, but despite Nvidia beating on earnings, it was still down. Nvidia closed by 6.38% lower. Ended up, Nasdaq attempt a recovery, big rally as Nvidia attempted to rebound intraday, but sold off towards the end of the session. Nasdaq ended down about 25 points lower. A rally attempt fizzled, and we ended down 6.38% on Nvidia after, again, the rallies ended up failing intraday. And you can see that on this chart right here. So Nvidia ended down about $8, down to the 117.5 area, breaking the 50-period moving average. Here you can see it. Again, here is the open. It attempted to rally to try to fill the gap. It's a 10-period moving average, but then it closed below that 50-period and resting right there around the 20-period moving average. That's a blue line you see right there. The RSI did break the 50 level with that gap lower. The stochastic broke the 80 level. Now we had the Dow up while S&P and Nasdaq were down. The Dow was up 243 points. The Dow slamming up into a major trend line of resistance of the channel. Kind of interesting there. S&P was flat, and the Nasdaq was down about 0.25%. Nasdaq 100 was down 25 points. Nasdaq Composite 39. Russell was up 0.66%, and the VIX was down just over 8.5%. Now, tomorrow before the market opens, we're going to get the PCE inflation data. The headline year-over-year number is supposed to come in at 2.5%. That's what it came in at previously. The core year-over-year is supposed to come in at 2.7. Previously, it came in last month at 2.6. A little higher on the core. The headline number is supposed to come in at the same level. In addition to the PCE data, we'll get the personal income and the personal spending data, and all of this will be before the market opens on Friday. And next week will be a short trading week. We will have the Labor Day holiday in the United States on Monday. Next week, we're going to be getting that jobs report. And remember, last jobs report we got, it's now predicting a recession. Hasn't been wrong since 1970. And it's basing that on the 3-month moving average of the unemployment rate, the 3-month moving average being above the low made over the last 12 months by 0.5%. That is predicting a recession, triggering the Psalm rule. Short trading week next week, unemployment rate, and then tomorrow the PCE inflation data. Now, one other thing about Nvidia is it did get a shift in momentum. Again, it's now below the 10-period moving average, but you did get that drop below the 50-period moving average. We took out the lower boundary of the cloud. We're below the 10-period moving average. You see the little red arrow. That's now going to turn the cloud to red. We're below the lower boundary of the cloud, taking out the 50. So what that means is there's a shift in momentum here. Hold below the 50-period moving average, we'll get a bigger drop. Even if we rebound, if we remain below the 10-period moving average as it's curling over, doors open for a pullback or a reversal if that happens. So we'll be watching Nvidia. Kind of interesting as that happens, Apple's getting a possible gravestone doji. Momentum has not shifted on Apple, but it's an interesting candlestick as we're getting that shift in momentum on Nvidia. Just something to pay attention to. Dojis can't be continuation or reversal patterns, but it'll be interesting to watch. See if Nvidia holds below the 50-period moving average. So what does that do for the Nasdaq? Nasdaq 100 had the shift in momentum the day before Nvidia got it, and again, I talked about this yesterday. We lost the 10-period moving average. We saw the red arrow. We saw the taking out of the lower boundary of the cloud, and again, we lost that 50-period. Now Nvidia is doing it. We're still below the 50-period moving average. That's the green line right here. Still below the 10, the red line right there. But there is a possible inverted hammer. Again, if this is just a pullback, we could still try to go higher. If things remain red, if we don't end up getting a big rally with the PCE data, it's still possible that, again, we get this larger corrective move right here, right now, and then go back up and go up to the 20,400 area, fill the gap, and then set up a lower high. That's what I think is going to happen. At the moment, we do have momentum down on the Nasdaq and now on Nvidia. So we'll be watching to see, do we get a recovery? And again, try to see the S&P push towards a new all-time high, try to push to fill this gap sooner rather than later on Nasdaq, or do we get a bigger sell-off and then come back and do it as we move towards the Fed pivot September 18th, which is what I think is going to happen. I think the Fed will pivot on September 18th. That's been associated with market tops, as I've talked about at great length and detail earlier in the week. So again, I'm looking for a topping process to complete. I'm looking for S&P to make one final push higher. I'm looking for NASDAQ to eventually fill this gap. But again, I'm looking for that to happen either before the Fed pivot, with the Fed pivot, or shortly after the Fed pivot there on September 18th. We're moving now into September and October. They tend to be months where you get a lot of volatility. And I do expect the topping process is likely going to complete. The question is, do we get that pop on the S&P immediately? Does NASDAQ try to come back and fill the gap immediately? We get this larger corrective, kind of a move going into Fed pivot on September 18th. Short trading week next week, so we'll be watching to see how it unfolds. But while Nvidia is getting that momentum shift on the Thursday session, we got it on the Wednesday session for the NASDAQ. We'll be watching to see if we attempt to recover or if it continues to have negative momentum here, and if so, does NASDAQ witness a bigger pullback? S&P, NASDAQ got the momentum, the cloud turning red. S&P didn't get it. It was flat today, and again yesterday had a red awesome oscillator bar, turned back to green today. I'll be watching to see if we get further weakness with the PCE data with NASDAQ, if that causes S&P to get that push down, if we attempt the recovery right here, right now, to try to make a new all-time high on the S&P 500. So while NASDAQ seen a shift in momentum, we don't have it here yet for the S&P 500. Reversal of conditions with the cloud, not yet. Try to rally with the PCE data. Watching, does NASDAQ shift back to bullish with momentum, or do we sell off and momentum remains bearish on NASDAQ and it drags S&P down? So we'll be watching to see which way it plays out. But like I said, going into the September 18th meeting, I do expect the S&P to make a new all-time high. Could get a pullback ahead of that, or it happens, momentum shifts back down. If it remains bullish, you can do it immediately. Divergence is on the 60-minute charts, but all they've done so far is really just kind of give us a mild pullback, and the S&P is kind of going sideways with that. S&P daily chart here. Now, as far as the S&P goes, again, watching to see what happens here. We've got the divergence here, much like what we had the divergence over here. See, does this just give us a term pullback, go up and make a new all-time high right here and fill the gap? And so you've got a possible 5-leg push higher. Again, L8 wave is speculation. I use it to validate or invalidate things. Counts get invalidated all the time. The question is, again, if we have a 3, a 4, do we get a 5 up here somewhere? We get a bigger sell-off and then come back up and do it as we move closer to the Fed pivot. It's certainly possible. S&P has not seen the shift in momentum yet, but we've got it on NASDAQ, and now we have it on Nvidia. So we'll be watching. Does that pull the S&P down with the NASDAQ there? Again, we've had this divergence on the MACD and on the RSI, and gapping higher today. Saw the rally fizzle out, and the S&P closed flat. Back all the gains with the rally on NASDAQ and S&P for the session. So I'll be watching to see what becomes of this. But right now, we'll have these divergences in play on the 60-minute chart. Just because I'm marking this count here doesn't mean it's necessarily going to play out that way. Again, there could still be a bigger sell-off before we attempt to make a new all-time high right here. But I do think that that is coming. Whether we get it immediately or whether we get a bigger sell-off and then come back and do it remains to be seen. But I do think that we will move up to that level. Again, 60-minute chart, we have this divergence. So it came down and it broke this trend line ever so slightly. We got back above it, and then now we're back below that trend line. Again, I've been watching the momentum line here and the momentum cloud. We tried to get back above them and then dropped right back down here below the momentum line. And right here in the trending cloud area, it's turning red into the future. So again, if we start breaking these levels, we can get a bigger dump. We'll be watching the 200 period. We'll be watching the gap fill down here on the 60-minute chart, the 200 in this gap fill area. Do you see that happen again? NASDAQ can get a bigger drop. We also have the back test of this trend line right here. If we do go beyond this gap fill area, that is a trend line to be watching. S&P 60-minute chart here. We do see a bigger sell-off Nasdaq, and it drags the S&P down. Watch the 20-period moving average. This is the momentum cloud right here, and again the momentum cloud down in this area right here. The 20-period moving average. Do have the 10 above the 20. If we move back to try to fill this gap right here, we've got the 20-period moving average very close to that level. Again, do we move to try to fill the gap up here immediately, or do we sell off first and then come back up and try to do that and move to a new all-time high ahead of the Fed pivot on September 18th, which is when I believe that is going to take place? Really the question becomes, do we move down towards gap support or the gap fill down here to try to fill the gap of the 20 period, or do we move to try to fill the gap right here? Which one comes first? S&P still at that backtest trend line area. We turned off of it to make a new high. Right now we got to clear that level and go to a new high, get a reaction, a bigger reaction off of this level. Again, watch the 20 period moving average and the gap directly below. S&P's had this shift in the trend where we're going up. We've now gone sideways with this divergence. So far it's just given us a pullback. It's not really given us a bigger sell-off. It still may. We're jumping up and down above and below the 50-period moving average there on the 60-minute chart. Remember, Nasdaq's drop below it. The 50-period is acting as resistance. So if we do get a bigger drop, watch the 200-period moving average and the 20-period in the daily, and the gap fill down over here in the mid 5400 area. Here I've marked the gaps down below. We have the gap up here, previous peak at 5669.67, so that 5670 area directly overhead. Again, does that gap get filled and we get the all-time high, or do we come back down here? Did fill this gap. We did fill this gap yesterday at the 5573 area. Below that, again, we have 5453 down here. It's under a 200 period moving average. 53.45 and 52.01. If we do get a bigger sell-off, this is the gap to be watching, 54.53, and our 200 period moving average is just above it near the 54.70 range. The inflation data, maybe with the light short trading week next week, do we try to do this, or do we try to do this and then do this? Regardless, again, I think we will be up here at this 5670 area and exceed it, move to a new high. Nasdaq, I think we'll get a lower high, but it could be we get a bigger sell-off first. So far, the divergences have really given us this kind of sideways move and this mild sell-off here on the S&P 500. We do have a divergence between S&P and Nasdaq. S&P moved to a new high. Nasdaq did not. The door is open to a bigger corrective move, but so far it's just been this sideways chop that we've had here on the S&P 500. The divergence has not, I'll say, retracement so far, but a sideways corrective move, at least so far. That divergence completing, just kind of selling off, rebounding back up, and kind of going sideways. See if we get the bigger drop or not. We make the attempt to go to 5670, but so far momentum's hanging in there for the S&P. We'll see if it joins the Nasdaq with momentum having already turned bearish. Now again, on the 60-minute chart, the S&P is above the 200, the black line right here. We're jumping up and down above and below the 50. Nasdaq is below the 50. The pring parameter is still positive, but it's rolling over. So again, there's still the possibility of testing the 200 and trying to fill this gap over here. Getting a bigger sell-off if we see Nasdaq and to drag the S&P down. But if we get a bigger sell-off, the 50 is still above the 200. Pring parameter is still in positive territory. In order for things to turn bearish for the S&P, we've got to see pring parameter go negative. We've got to drop below the 200, then have the 50 drop below the 200 here on the 60-minute chart. We could get a bigger sell-off. Things are still positive. It's likely that we're going to make a new all-time high. Whether that is sooner or later really depends on this chop. Does the chop lead to a bigger sell-off? We just correct sideways and end up turning up higher. So we'll be watching to see how it unfolds. Remember, Nasdaq had that shift in momentum. Now S&P has followed yesterday's down day. Again, if we start losing this 10-period moving average, we're below it right now, but if we start getting a bigger drop below it, if we have a topping tail here rather than an inverted hammer, we have a topping tail, and if we start getting a bigger sell-off towards the 20, towards the gap fill here, then S&P might join Nasdaq and see momentum shift with the reversal of conditions for momentum. Even if that happens, again, we're still likely going to come back and fill this gap up here and make a new all-time high. So we'll see, do we get the sell-off and then a rebound, or do we just try to rebound and make a new all-time high immediately? S&P is losing that 10-period moving average with momentum rolling over. So again, if it joins the Nasdaq, getting a reversal of conditions with the red cloud talking about in this video. Back up at the peak, we had this divergence, and it gave us this nearly 10% sell-off. We've rebounded back up. We've now formed this smaller little divergence. So far, again, that's just given us some chop here that has just kind of given us a mild pullback on the S&P. If we have a topping tail here, we could see a bigger sell-off to go back and fill the gap and test the 20 before going higher. But we just get a mild pullback, and this is an inverted hammer. We start seeing signs of strength in the 60-minute time frame. We can make that new all-time high immediately. Now, Nasdaq, after filling this gap over here, we've been struggling. We've pulled back here again. Do we have this reversal taking place off the upper end of the trending cloud here? We get this pullback. Again, gives us something like this, where we've come back down and then we turn back up, and we eventually come back and fill this gap at 20,400, and then get this double top type of a pattern, the lower high. In a rally right now, we got to be able to really clear this area, and again, you've got a possible bull flag or bullish falling wedge under construction, but again, we're going to get a rally. We got to clear the trending cloud and back above the 10-period moving average, the 50-period moving average here, the green line, we're just below it. The 10-period, we've rolled over, we're under it. So we got to clear those levels if we're going to try to resume the advance. Eventually, I think we're going here. The question is, do we do that sooner rather than later, or do we get a bigger sell-off that, again, gets something like that into the Fed pivot? And I told you earlier in the week we had that shift in momentum in Nasdaq. We also had it here, along with the cloud that I showed you in this, that I'm showing you in this video. Nvidia is doing this as well, right here with momentum. So again, does this cause the Nasdaq to remain below that 10-period moving average as it's starting to tip down now? And again, if so, does that give us a bigger sell-off? Again, come back and fill some of these gaps down here and down here. Show you on the 60-minute chart. Again, if we do that and start moving back down for Fibonacci retracement of this move right here, maybe towards the 200. Again, if we do see that happen, again, you could see that scenario that I talked about eventually coming back up here to the 20,400 area. Do you think we have a possible larger ABC move here under construction on the Nasdaq? Should we get a bigger sell-off, then rally after that with a move to higher levels to the 20,400 area, likely overthrowing it? We move towards the Fed pivot. Possible head and shoulders. Guesses we're going to end up seeing a double top instead that will eventually, probably look something like this. And then I think S&P will move to a new high, and it will diverge with Nasdaq. Now, Nasdaq's come back and filled these gaps. We still have this one up here, but like I said, I think that we do get a bigger pullback. An ABC move could be under construction, but still come back and fill this gap as we move closer towards the September 18th Fed pivot. Right now, momentum is still down on Nasdaq in the daily time frame, the intraday charts, a 60-minute chart. Now, Nasdaq 60-minute chart, pring parameter is still bearish here. It's still pointing down, but it's in positive territory. The 50 is above the 200. Again, as we have dropped below the 10-period moving average on the daily chart, we drop below the 50 period here. We're getting resistance here at the 50 period and the 10 period in the daily, along with the cloud here in the 60-minute time frame. Got a possible bull flag that's developing. Maybe we move to the 200 and it completes. If we get a drop below the 200, again, you've got the gap filled down here. You've got the gap filled down here. Again, do we get a larger ABC type of a move right here, right now? Do we see Nasdaq just drop through the bottom of this lower boundary of the bull flag? Or do we try to break out above it and clear the 50, clear the 10 in the daily, and clear the cloud? If we do that, then again, you're likely going to go back and try to take out this high. We'll see if we try to make it up to this level. If we see these levels act as resistance and continue, struggle to get above them, above the 50 period here on the 60-minute chart and above the 10 period on the daily in the daily time frame, then again, it's possible we have the bigger drop, as I've been talking about, for the larger ABC move. You can see the crisscrossing back and forth of the 50 and the 200 as we're forming this large topping process, the crisscrossing of the moving averages. Bullish going here to bearish, back to bullish, bearish, back and forth, back and forth. Some things to be paying attention to. The 50 curling over. We're getting rejection added here in the 60-minute time frame. The 10 period in the daily time frame on Nasdaq. In order for a bigger drop, pring parameters got to go negative. Got to drop below the 200. The 50's got to drop below the 200. That's what has to happen for a bearish scenario right now. Still in a bullish scenario. Pring parameter still positive. 50's above the 200. But price has dropped below the 50 period moving average, and so we're seeing this this pullback or possible larger corrective move if it continues downward. Nasdaq 60-minute chart here. Here you can see it. Here you can see it up close on the 60-minute chart. Again, possible bull flag in play here. Maybe not done if we hit the 200 or move just beyond it, but if we start losing this area right here, you can get a bigger sell-off. Again, we would have a failed pattern on the bull flag pattern. Again, a breakout of the pattern above the cloud, above the 50, then could take us to the next gap up here. This one right here, we have filled, as I've said. Seeing this negative divergence play out in this sell-off right here. So we'll see, does it conclude somewhere above the 50, 200 period, the black line right there, the support and resistance line, the orange line right there, or if we take those levels out, again, a bigger sell-off. Like I said, eventually, whether we get a bigger sell-off right now or have this more mild sell-off, but then get a bull flag breakout, eventually I think we're coming up to this level right here. A bigger sell-off, RSI might reach oversold levels here and form a divergence. The sell-off today, again, we had a rally that fizzled out on Nasdaq. We're seeing the MACD roll over here at the center line. So again, the risk is that we blow through this area and get a bigger pattern, a larger retracement before going up and hitting this 20,400 area. Now here are the gap fills. Again, we had the diversions over here. It ended up giving us a 15.7% drop on Nasdaq. We recovered. We broke the downward trend line. Coming back and filling the gaps, we got back above the 10 and 20 period moving average on the daily time frame, giving Nasdaq a bigger rally. We rallied up. We formed this divergence here, and that's given us a sell-off. Either a bull flag is setting up, or again, if we drop through it and take out the 200 period moving average, we can come back and fill some of these gaps. You got one here at the 19,000 area. Below that, you've got one here at the 18,550 area. But if we rebound back up and again clear the trending cloud, if we clear the 50 period, the green line right there, right at the upper boundary of the bull flag, and break out then again, you could make an attempt to go up and try to fill the gap sooner rather than later. So again, I'll be watching to see how it unfolds. You start taking out that 200, you start dropping below this trend line, then the door is open to filling this gap here at 19,000. And some of these other gaps, if we, again, get this move, this corrective move right here, right now, as we move towards the Fed pivot, we get a sell-off, but then we get a rebound up towards 20,000. So I'll be watching to see which way it plays out. Do we just have a mild pullback and are going to resume the advance, or do we get something that's going to be deeper, something going to be bigger? Momentum has turned back up with this divergence right here, but it's only given us another lower high, at least so far. Nasdaq 60-minute chart here. We're watching the bull flag. Do we break out with the PCE data going into next week with our short trading week, or do we start seeing a drop below this 200 period moving average, coming back and filling some of the gaps?